Good afternoon. Today is April the 13th. It's a Thursday. It's 3:45 in the afternoon Pacific time. I want to start with the Aussie dollar. I'm starting on a larger time frame today. I'm starting with the 360-minute chart, as you can see, top left. I actually only want to show 2 or 3 markets today, and I just want to give an update on the Aussie because I follow that, and I'm actively trading the Aussie dollar. But I also want to introduce my euro dollar chart, which is, that's the most volatile currency out there. So, it would be wise of me to actually try to show some labelings on the euro dollar. But what I want to point out is it's one of two things. I actually want to look at this on a daily standpoint. So let me find my daily chart. All right. So a few things you got to consider. So I raised my stop. Before this particular move down that I got in, I was actually, let me see how much am I up here. I anticipated with a couple videos ago. I said price would go more towards 74.50 to complete wave 1, which I was expecting it to go and find some support right in this area where this purple moving average line is at. What I noticed is that it actually found its support at 74.75, give or take, and this is actually the 1.32 area. And what I've noticed is that in wave 3s, this is wave 3 of 1. They tend to find that support around 1.382, although in Elliott's, not necessarily rules, but in Elliott's books, it says that 1.618 tends to be where wave 3s end. Now, I had this as a wave 3 until this particular sharp correction hit. So that's why I always say get comfortable changing your mind, get comfortable changing your labelings. So what I did is, if you did see my video a few days ago, you would notice that, see, these bullish alternatives were not here. What you want to keep in mind when you're trading waves, and when you're labeling and you're doing your analysis on Elliott, you always need to keep in mind an alternate count, and you want to keep to me, I like to keep a bullish and a bearish count, because just as likely as this is over the last year, I've been dealing with, or I've been trading this Aussie and labeling and relabeling it. Like at one point, I think I had this top of C as the top, and then it went down, and then it made the low, so D. And then I think right here where my A is, I had, okay, that's the top, and that's E. And then it went down a little bit, and it kept going up. Okay, no, for sure this was the top, and it went down. And I was in this trade, and I got up over 200 pips, and once it got here, it just shot up, as you can see on me. I only banked about 75 pips out of the 200 because I didn't let my emotions get involved, but this particular top was like 77.40. Now 70, if you see, the top of C is 77.80. So it was a 40 pip stop loss, basically. If it was to hit that C range here, then this entire year count would have been invalidated. So to me, it was a no-brainer. But what I did think was that this would actually move below where it actually did, and it didn't. Now the good thing is that this particular low, although it does not confirm this E yet and wave 4, what it does tell me, it tells me a few things. It tells me, one, that because it broke this particular low, it tells me that I'm likely to see prices continue lower. However, you don't want to get tricked by the market. So I came up with a bullish alternative. Now, if this is the A, right, and the A topped out at, let's say, 78.35, then this is possible that now we can be in a bullish triangle, and this bullish triangle will be a bullish triangle wave B. And instead of this being here I will have a bullish A alternative. This move here will be, this will be an A, B, C for a bullish B alternative. Then you'll have another three-way move down for a bullish C alternative. And then you'll have a three-way move up where instead of this E of 4, this will be wave D, bullish. And then you'll see this move down, which this can be an A, you can see a B, they can come back to about 76, 60 or so. And then you can see wave C penetrate and come all the way to, let's say, 72. 84. Let's just give or take 72, 84. That can be wave E on a bullish alternative. So now this will be a A, this will be a B, this will be a C, this will be a D, and this will be a E. Let's just say it ended in this area. Now what? Instead of it being short, as I'm projecting and as I've been trading over the past several months, it will go long. And all of a sudden it'll go well into the 80s, high 80s, or even 90s. But one thing that kind of confirmed that is, I don't want to say confirm, I don't want to use the word confirm, but one thing that gave me a better outlook was when I actually pulled up my UpData Ichomoku chart. I'm not sure if I'm saying it right, Ichomoku chart. And I took a look at everything, and let's see what I came up with. So this is the Aussie dollar. This is on a 60-minute. I don't want to look at that. I wanted to look at the other one. Give me a second. I wanted to look at this, and we can play with it. Now, if you know Ichimoku clouds, then I'm not the person to actually teach it. I just know how to trade, and I know what to use. At the end of the day, this red and these green lines are simple moving average lines. As you see my cursor over here, it's a 9, 26, and a 52. The cloud, how you trade with the cloud is anything below this particular cloud, you're short. The trend is short. Anything that goes above the cloud, the trend is long. What you do is this particular moving average, this blue line, what you're waiting for is that to penetrate inside of the cloud. Now, if you notice, when it was here, prices were still going down, and then you seen this particular. Now, you're not going to be able to, like how you're seeing it right now, that's not like how you're going to see it. So it's not going to be this particular indicator that all of a sudden you say, okay, wait, let's just wait for this blue line to kick in, then you go long. It doesn't work like that. But what you will be able to pick up on is the width and the length of the cloud, and that can be able to kind of give you a better indication on what's likely to happen. Now, as you can see, once price entered the cloud on this impulsive bar, it found resistance right at the tip pretty much, and it stopped it. And as you can see now, it's going down. This is why when right now I'm not really comfortable, calling trades on YouTube. It's just not my thing right now. Eventually, down the road, as I get a following or something, if that's something that people want, then I'll consider it. But it's not a guarantee I'm gonna do it. But my stop was up here, and this stop here is like 76.50. UpData doesn't really, well, I'm not really that great with UpData, but this stop here is like around the 76.50 range. And I knew that, and it's still a possibility that it could get in here to end wave 2 of 5 on the long term. But I knew from looking at this what was likely to happen. Now, going from that to a day, let's just give this on a daytime frame. Let's see what happened here. Let me reload it. All right. So it looks ugly. Don't get me wrong. This is how it's looking, but you will learn to. If UpData Ltd, I think it's a London-based company. I know it's a London-based company. They have YouTube channels on how to use their charts. So just you can always YouTube them UpData if it's something you want to consider. But as you can see, as of right now on a daily time frame with the Aussie dollar, it's telling me something. It's telling me, this told me a while back that it would be bullish. Now when it's bearish, you'll see the clouds will actually be this reddish pinkish color, and when it's bullish, it will turn this color. But what it does is the cloud it projects out the next several weeks on what's likely to happen. This here is the best indication to tell me that this market will still remain bearish, because this particular cloud is already wide enough. It's too wide, and as it gets one, that's an indication that prices is going to start to turn the other way. It's only wide now because prices over the past several weeks or months have been relatively bullish. So this is just one of several indicators that I don't use many indicators, but this is one that I pay attention to. I go back and forth between UpData and NinjaTrader's clouds because they look completely different, and one is good and one is great. UpData's is great. NinjaTrader's is good. It's decent. It's okay. So that's why I do that. I also love UpData's point and figure charts. So when I'm looking at, let's see, I'll break it back down to a 60-minute, and then I'll hit the boom, and I'll change it. And that's now, this is my point and figure. Also, if you don't know how to trade point and figure, it's a really good analytical tool. Obviously, you see these are trend lines. These X's and O's represent price. However, each particular X or O is not one tick. It can be several ticks based off of your likiness. And when you see, so I think like how I have it set up is for each O, it would actually have to go down like about 20 or so ticks for one O to represent it. And that's going to confirm to me that this particular trend is going down. Same for the X's. So this is like, this entire move here is like 100 pips. All these X's. You only see about 10 X's. But that's 100 ticks. Once it got here, it found its resistance at this trend line. What is that telling me? If it didn't penetrate it and go up, that means that it's going to get stopped cold. And as you can see here, price is starting to make that particular O, that red. So it's warning me that there's going to be more room to the downside. So in the short term, I'm not worried about prices going that high, much higher than the 75, 90, or 85 or wherever it went to. I'm just looking at, I'm letting my technicals tell me, I'm letting my analysis tell me, and I'm going from there. But that's something I'm gonna start introducing more. I don't know how to teach it, but I'll give it a try. One thing I did want to do is just point out a few things. Number one is I'm not ever going to sugarcoat much. If I'm in a trade and I'm making good, I'm doing good, I'm going to post that. And if I'm in a trade and I'm not doing good, I'm going to post that as well, because no trader alive trades and wins 10 out of 10. It doesn't work like that. And if it does, if anyone says it does, you should actually unsubscribe from that channel. So with that being said, let's go to the Euro Yen. A couple days ago, I actually took this trade and I said prices will go to around 115.90, but I also said 1.236 will be the most likely area to where it will find its first support. I got in at 116.28. That was half contract. I'm waiting for prices to come to about 115.25 to fill me in for my full half, my second half, as it will go up. Now if this is wave 1 all the way up here, this is wave W, this is X, this is Y. 1.236 is good enough for this particular market to just shoot up and actually not even fill me here, and I would have to try to just basically just trade half, which is totally fine with me. And if you go back to the video I did prior, you would see this 1.236 at 115.71, and prices was like right up here. It was more like at 116.70, and I already had projected 115.71 just based off me measuring the waves. And now you see 2 days later, look where it is, and look where it's finding its support. This is Elliott. This is Fibonacci. This is good technical analysis. It's also really good. I'm down 43 ticks. So what? You know what I mean? I'm in one trade that has 3 times this particular amount that I'm losing. And right now it's not a loss. I chose to get in at a high price because the price, because the market could have just turned around and gave me some points. If I take a loss, I'll take a loss. I have a stop loss. I'm not worried. And I'll just re-enter. That's how you do. Sometimes you could take 7 or 8 or 9 different consecutive losses, and your 10th can be your winner, and it will erase all of those 9 losses and give you profit. That's how you trade. You don't just continue to take losses after loss after loss. It doesn't work like that. So to keep from making this video longer than what I would like, the last thing I want to do is talk about the euro dollar, and I want to go to a daily chart that I've been trading this, but I haven't I've actually been trading the euro dollar longer than any other current pair, and it's been doing great. There's been times where it's been against me, but for the most part it's been great. Let me try to find the euro. Okay, here it is. So over the last course of the year or so, we've been working in a triangle. At the top here of 1.1714, this is where I have my A. As you can clearly see, these are 3-wave moves. So this is an A, B, C for B. You have a 1, 2, 3. So if you know triangles and you know Elliott, you know the triangles are formed in 3s. So you have a B, C for A, B, C for B, A, B, C for C. So C of a larger C. Then you have a 1, 2, 3 move for A, B, C for D. And then you have a B, and a sharp C for E of wave 4. Then you can count what is very difficult to count, but you can count 5 ways down for a wave 1. Here, I took the majority of this trade. I actually think I entered this trade at around 112.15, somewhere around there, and it went up to 113, 112.96, and my stop was way up here. My stop was still at 116 because I knew wave E couldn't go above this, and we did project it to go a little bit higher than what it did. So when we got in, we knew the end was near, we just didn't know where. So immediately once it broke down, my stop came from here to the top of this B. And then when it broke down again, it went from there to the top of the E. Then it went to the top of here. Then it went below here. And then finally, when it went below this D, it popped up and popped me out. And I was like, oh man. So it was like 400 ticks. I was into it, and I missed all of this. It happens though. So what happened was wave A started of 2. I took a little bit of B, and then wave C of 2 went, and then I missed the majority of this. I got about 100 or so ticks out of this one, and now I have this projected of wave 1 of 3. So most likely prices will find support somewhere between 107, if not around 10, close to about 108 for wave 2 of 3. Then I'll go short again. So we'll keep an eye on this one, and I'll update you guys on this one if this is something that you want to trade. But basically, I have it going to around here, somewhere mid 107, and then from there that'll end it, and you should see prices go down, and it has to go below that 1 to start it, and we should be good there. Now to go to point and figure and show that this is not that. Let's see, that's the euro yen. That's nothing. Where was I? Okay, Aussie 4. Let's see. That's the Aussie New Zealand. Bear with me. Let me find it. I don't know what I did with it. Yes, here it is. Now, if you see this, look at the blue line. The blue line has already penetrated this particular cloud, but look at the color of this cloud. The color of this cloud is not red. So right now, in the short-term future, this price is likely to go up. It's probably going to go up here somewhere, which is, you can see in that yellow chalk, you see that 10, in that yellow thing it says 1.072. So that's telling me that it's going to go above 107. I personally think it's probably going to go about right here. So that's more like 107.7. So 1.0770, and in that area, it'll probably, yeah, about right there, 107.70, somewhere around there. As you can see though, look, here's my indication. Although it's been relatively bullish in the short term, the trend is down. And what is this telling me? That it's starting, the trend is going to continue real soon. Look at the color, it's getting ready to change. This is a daily time frame, so this doesn't happen overnight. This is going to take several weeks to happen. And this is not really that wide. Look how wide this was, and look at the fall. Look at the fall of that. See, I'm trying to take you through it. It's a messy chart. That's how it's actually. I don't do anything to it. That's just how it happens. But this was the wave E here, and then look what happened with this E. This is really where it was at. So look, as this wave E happened, look what was happening with this blue SMA. It was penetrating, and once it penetrated and broke it, and price broke below the cloud, look at it. It never went back into the cloud. When it went back into the cloud, look what happened. When this went and it penetrated and went in the cloud, it told me something. So look what happened. As it starts to go in the cloud, look at price. Price starts zigzagging, then it finds a bottom. Then it finds a bottom, price goes in, and boom, we go up. Now price finds support right at the bottom of this moving average inside of the cloud. And what's likely to happen is price is going to test this particular moving average. And once it gets above in that area, it's going to go up just a bit more. And I'm looking at this particular moving average here. That's why I'm looking at that 107.60, 107.70 area. And then I'm looking at this. These are all the indications that you need to trade. And you can literally you can Google or YouTube Ichimoku clouds, and someone is going to be able to teach you. That's pretty much how I got the education on some of these indicators. And then you just add it to your trading log. So I'm gonna leave it at that. I'm gonna post a video tomorrow just based on how the week was, and then I'll be back again on Sunday. So I hope this helped any of you eliticians out there who just need a little bit more assistance, or any newcomers who just kind of need a little bit of guidance to get through just starting to trade and starting to really just label and get the hang of Elliott. It's not easy, but when you have a little bit of guidance and someone who can give you some immediate feedback, it will help. And you definitely need that, because it's a long process. But I mean, just ask questions. I'm here, so just ask me. But enjoy you guys' week, day, and I'll see you tomorrow.